It's another frustrating day in the crypto trenches because here we are again, the S&P is hitting all-time highs, stocks are absolutely exploding, and in crypto, well, it's just another day. We've got the altcoins moving sideways, they moved down yesterday, they're moving up today. I'm going to show you today why I think this has to end. This world where stocks carry on running and crypto basically goes or moves sideways. I'm going to show you today why I think that it's really going to end, and it's going to end pretty soon. I'm going to show you what's actually going to be driving it. There's a little bit of rocket fuel that's going to be driving it. And I'll even go as far as to say that if this doesn't land up moving the altcoins, then we've really got to question the altcoins. Now, I'm not questioning the altcoins because I've got extreme conviction in the altcoins. But if this doesn't move the altcoins, then we've got to really question the altcoin thesis. Then later on at the end of the show, you guys all came, well, not you guys all, but a lot of people have been reaching out to me and saying, make us the ultimate crypto and stocks portfolio that we can actually buy using our crypto money. And today I'm actually going to show you one version of that crypto, the ultimate crypto and stocks portfolio, where you can use crypto money to buy everything, your USDT and your Bitcoin and your ETH, to actually buy the whole thing. But you can hold exposure to everything that's exploding, including the stocks. So yeah, I think that's pretty much what we're going to be doing today. That was actually driven by a tweet. The idea to make this was because a lot of people are reaching out to me, but also because of this tweet here by 𝗲𝗲𝗪, who says, what if stocks were the alt season all along? And if they are, we don't want to miss it. So let's talk about what stocks we're going to add to our portfolio, how we're going to add them to our portfolio using crypto money, and how we're going to position ourselves to really be able to smash it out the park in this cycle. So that sounds good to you. You know what to do. Let's go. I look at the chat really drives me. Like, it's the same people, it's the loyal people, the guys. If you're still here in this market, when the markets where the altcoins aren't moving, you've got to have extreme staying power and extreme tenacity to still be in crypto. And if you are, as I said in the bear market, and I'm saying it now again, you will be rewarded, because that's just usually how it works. The people that are here now, the people that have interest when nobody else has interest, they are the ones that are ultimately rewarded. The people that continue to be here every single day and to study crypto every single day, not to get demotivated by the wins that are happening outside. That's the people that land up making money. So if you're here, congratulations. I see everybody that's here. 𝗕𝗲𝗕𝗗𝗏, 𝗕𝗲𝗀𝗏𝗏𝗏, I see here. 𝗕𝗐𝗍, is that 𝗕𝗐𝗍? Yeah, I think I see 𝗕𝗐𝗍, Chris, I see everybody here. And it's amazing that you guys are still here. We do have a big show today because when I read this tweet and I saw this, like, what if stocks were the alt season all along? I think stocks have been an alt season all along. And for me, I've had a portfolio of stocks and crypto. Obviously, I've had much more in my crypto than I've had in my stocks, and maybe it hasn't been the best part of it. But the good news is that I actually think there's going to be a new money flow in crypto, and I think the new money flow actually lands up looking something like this. I think people are going to move from the stocks and they're going to start moving their money into crypto, and we're going to discuss how this is actually going to happen. I'm also just going to show you why I think that really now, we've been talking about alts running for a long time and they've disappointed us for a long time. But I'm going to talk to you about why I really think that in the next 6 months, the alts have to at least start moving. And if I don't start moving in the next 6 months, then we've got to severely question our thesis. That's one of the things we have to do. So that's what we're going to be talking about today. Satoshi, much love. You're saying much love from America. I'm saying much love from Cape Town. I'll give you guys a lot more love if you guys can give me the love. Smash the like button. That's the only love that I'm actually asking about, that I'm actually requesting. Let's talk about Bitcoin. So yesterday again, we dipped again, we went back up again. We're teasing this little trend line here, and it's very frustrating because if you look at the S&P is now at all-time highs. And very interestingly, when you look at the S&P's now printed that golden cross. It printed it yesterday. It was inevitable that the golden cross would come. It came yesterday, and this is a very interesting golden cross on the S&P 500. And the reason why this golden cross on the S&P 500 is so interesting is because if you look at the previous golden crosses actually came before the all-time highs. So you look at like this golden cross, which came in July 2017. It was before the all-time high, right? And then Bitcoin went, and then the S&P went to all-time highs afterwards, right? Here again, we're getting the golden cross. I mean, literally, this is the chart. It's on the one-day chart, but you're looking at all the different golden crosses. In every single case, obviously, you had little blips along the way, but in every single case, it really took the S&P to big all-time highs. And we've just had that specific golden cross land up happening here, right? And if you compare the S&P and Bitcoin, now they've struggled a little bit with direct correlation on a day-to-day, but in general, the direction between Bitcoin and the S&P is generally very, very, very highly correlated. You can see that. And of course, the reason for that is because it's all about the money supply and about the liquidity in the markets. When there's high liquidity in the markets, the stock markets move, and so does Bitcoin move. When there's low liquidity, obviously, both of them actually land up going down. One of the things that we need to talk about around the S&P is that if you look at this V-shaped recovery that we had, it's a perfect V that we had. But the markets recovered from the low, they recovered to the previous all-time high in about 77 days. And that is one of the fastest and most remarkable S&P recoveries that we've ever seen in history. Now, first of all, that's amazing if you're a position, but you've also got to ask yourself what's actually going on under the hood here. And what's going on under the hood here is a combination of two things, right? The first thing that's happening here is a lot of people were short and got caught out around this tariff trade. The second thing, a lot of people were short around this tariff trade, and we had a short squeeze. At the same time, we also had people FOMOing in, trying to catch this rally. And now you've got this S&P 500 basically back at all-time highs. But it's not as pretty as it actually looks, and I'll show you why it's not as pretty as it actually looks. I got this from this piece of research by Bravos Research, and I want to spend a little bit of time actually going through it because I think it's a great piece of research by Bravos Research. So I want to play you the clip. I've sped it up a little bit just so we can get through it faster than the 4 minutes.
Buying back into the market to avoid missing out on profits, and short squeezing as investors that were hedging against downside risk need to cover their short positions, forcing them to buy the index. This is why these kinds of V-shaped recoveries can be so violent. Similar to 2020 and 2019, the index is immediately taken back up to all-time highs because of all of that forced buying that is taking place. But while the index itself has powered through as a result of that forced buying, the average stock within the S&P 500 hasn't performed well at all. In fact, this line right here shows us the percentage of stocks within the S&P 500 that are trending higher at any given point in time. Right now, it is still below 50%. So in other words,
what you're saying is, even though the S&P's gone up, it's not actually that the whole S&P's gone up. It's that the biggest stocks in the S&P have all gone up. Now, one thing you need to understand about the S&P is an index that is a market-weighted index. It's a market capitalization-weighted index, which means that the bigger stocks move the index more than the smaller stocks move the index, right? So if the big stocks move a lot and the small stocks hardly move, the index will move up a lot because it's a market-weighted average, right?
While the S&P 500 is at all-time highs, we have the majority of stocks within the S&P 500 that are still trending lower. Now, this by itself is not the end of the world. You can always see this line catch up. But it does tell us that right now, there are still very much underlying concerns on the average S&P 500 stock, and that most have actually not participated in this big rally. The big run-up on the index has been fueled in large part by just 4 companies: Microsoft, Nvidia, Meta, and Netflix.
Since those are some of the biggest companies, and those companies have moved the most, and they've moved the index up.
Low, the S&P 500 has rallied by roughly 20%. Microsoft and Meta have rallied by 40%, double the S&P 500's performance. Netflix has rallied by 50%, and Nvidia has rallied by 60%. Now, just keep in mind, these 4 companies together make up almost 20% of the actual S&P 500 index. So
what does that mean? It basically means that this move has been powered by a whole lot of other stocks. And listen to the next part, and then we'll forecast what's going to happen next.
Extreme outperformance during this rally has been in large part what has lifted the index higher, and that has created a divergence between the cap-weighted index, the S&P 500, and the equal-weighted index, the RSP, as the cap-weighted index has benefited immensely from these very strong recoveries in those handful of extremely large technology companies that make a huge portion of the index. This divergence by itself is not the end of the world. We actually saw something very similar in 2020 during the recovery from COVID-19. In August of 2020, the S&P 500 made a new all-time high, while the RSP, the equal-weighted index, was still struggling significantly below its previous all-time high. But look at what happened right after the S&P 500 made a new all-time high. It corrected back lower by roughly 10%, digesting its gains before eventually it did move higher. This is a textbook.
So this is the situation. So right now you've got the big stocks that have moved a lot, but the smaller stocks actually haven't moved as much, right? So if you look at, let me see if I've actually got a chart here where I can show you this. Okay, I don't actually have a chart where I can show you this, but Actually, did I maybe make us a chart here? Okay, no, I didn't make us a chart here. But you saw the two charts. You saw the equal weighted and the normal weighted S&P 500. And what's basically happened is the big stocks in the S&P 500 have moved, and the small stocks in the S&P 500 haven't moved. So what typically happens in this kind of scenario? The first thing is generally the big stocks need to cool off. And so what happens when the big stocks land up cooling off is we get a slight pullback in the big stocks, just like he showed on his previous chart. But then the rally typically continues, or if the rally typically continues, then the rally becomes a much more widespread rally. So I almost want to think about it as people are not sure about the bounce. So if you think about the psychology of what's actually happening on these charts, when we were here, people were not actually sure about this bounce. And so in order to protect themselves, they only went into the big stocks. As they went into the big stocks, they pushed the index higher, and the cycle perpetuated itself. Now the big stocks have got too much of the money. And so what needs to happen is we're going to get a slight correction in the big stocks, and then the money will start to distribute itself more evenly amongst the two indices, right? That's pretty much what we expect. What we expect is going to happen here. 𝗕𝗲𝗕𝗃 actually posted a tweet over here, and he said something quite interesting. He said the next few weeks the play for the next few weeks is buying the Russell 2000. Now, what is the Russell 2000? It's a broader based index with a lot more smaller stocks. It's called the Russell 2000. He says the thesis is that into the quarter end, no fund managers were going to sell mega cap performers to buy poor performers in the Russell. The new quarter, they can now actually start rotating, which kind of goes into the same paradigm of saying the big ones have run, and now people are going to rotate their money into the small assets, right? So now let's look at you got the Russell 2000 over here. And the interesting thing around looking at the Russell 2000, I'm going to put the Russell 2000 over here for us, just so we can see Russell 2000. I want to show you this, and I'll show you how this all relates back to crypto in a second. But I think we just have to understand the macro picture in which we're getting to. If you look at the all-time high on the Russell 2000, the previous rally, the Russell 2000 actually topped first. It topped before the S&P 500 actually topped, and it started crashing before the S&P 500 actually started to crash, right? Now what you can see is that the S&P is leading the Russell 2000. The S&P is at all-time highs, and the Russell 2000 is not at all-time highs, which means that there's probably still a bit of rotation in stocks from safety into less safety. So you're going to get this rotation. Well, if the rally continues, you're going to get a rotation. Just like we get a rotation in Altseason, we get a rotation from Bitcoin into the altcoins. Here we're going to get a rotation from the big stocks to the small stocks. So what does that mean? It means that, number one, there's probably a good opportunity if you think this rally is going to continue. Again, if you think the rally is going to continue, probably one good opportunity is to actually put some money into Russell 2000 now, or into slightly smaller stocks, which is exactly what Gareth says. That's the one opportunity, and I'll show you later how that leads into crypto and how the money is going to flow into crypto. In the meantime, what I want to show you is that really all the sectors in the stock market are actually running. So you've got the NASDAQ, which is just below its all-time highs. You've got this index over here, which is the Van Eck Semiconductor Index, which is the you can almost say it's a proxy to AI because it's a semiconductors to AI. You can see that that's also having a golden cross. So if you take that and you take that, you'll see that's also just had a golden cross, and it's in price discovery. So if you zoom out, you can pretty much see that index is also now going into price discovery. So the stock market on the charts looks extremely healthy. And actually, the stock market is showing us what we wanted to see in crypto. It's showing us the golden crosses. It's showing us the runners. It's showing us the transfer of money between the big cap alts, the big cap stocks and the low cap stocks. It's really doing everything that we want crypto to be doing, but crypto isn't doing yet. And now let me show you why I think that crypto is actually going to start doing it. Or crypto, I would say, almost has to start doing it. And if not, then we've seriously got to question the market structure. And I don't think we are going to question the market structure, because every time we've wanted to question the market structure, the market actually delivers what it's supposed to deliver. So the reality is that the reason why the markets are not running, and we've spoken about this a lot, is because we are still in tight monetary policy territory. When I say tight monetary policy territory, we're still not reducing interest rates. the Fed is still not doing quantitative easing and isn't going to be doing quantitative easing anytime soon. So we're not in the financial environment where crypto is supposed to run. We're in a financial environment where people are still risk averse and there's not too much money flowing around in the economy. In order for that to change, the situation needs to change. Because without the situation, the macro situation changing, there's nothing that's going to bring enough money into markets to entice investors to leave stocks and to go down the risk curve. There is absolutely no reason in the world why any investor needs to leave a market that is giving them this kind of returns, that's giving them this kind of returns in stocks. There's absolutely no reason in the world why any investor is going to leave this kind of market where they're getting these kind of parabolic returns, right? And so the only time that that's going to happen is if we really, really, really get more money flowing into the economy. Now, I know that you guys are all on Twitter. I know you guys are a bunch of degens, right? And on Twitter, everyone's been sharing this M2 money supply chart. You've seen this. How many of you have seen this M2 money? I'll show you one tweet. I just think there's so many of these tweets. No disrespect to 𝗙𝗵𝗕𝗗𝗄, I actually know him quite well. You can see here, it says the global M2 money supply just hit a new all-time high. The US M2 is now alone $22 trillion. And what we know is that this US money supply chart, there's probably a 70 to 80 day lag in this US money supply chart, which actually where Bitcoin and risk assets actually land up following the US money supply chart. Let's look at the global money supply chart once and for all, and actually understand it properly. So the US money supply chart is this chart over here. This is the M2 money supply from the Federal Reserve. And indeed, this chart is very much now at all-time highs, which means that in the US money supply, someone says M2 line, this is the M2 line, M2 money supply line. This is the line that's basically taking us up. And it's true that if you overlay that line against Bitcoin, there's a very strong correlation between that and Bitcoin, but there's a 70-day lag. In other words, this chart usually goes 70 days forward. So this would probably be this dip over here, you see? So if you just overlay them and you go 70 days forward, right? That is how that money supply chart actually works. And you can again see it here. You can see that the money supply, if you take the money supply and you don't only take the US money supply, you take US plus Japan plus all the big money supply charts, and you generate an international money supply level over here, which is, I think you can see it. Yeah, you can. I guess probably the best place to look at it is here. You can see that the international money supply is actually increasing, but it's not increasing as fast as you may think that it's increasing. And the reason why it's not increasing as fast as people make out on Twitter, or as fast as you may think it's increasing, is because the US money, the money supply is denominated in US dollars. But we have a chart here to show you what's happened to the US dollar. If you take the US dollar since January or since February and you plot down, you see that the US dollar has depreciated by more than 12%, which means that if you take the global money supply, and it's got all of these other assets in it, it's got Canadian dollar, it's got the Japanese yen, it's got the euro, it's got the Great Britain pound, etc., what you realize is that a lot of this bounce in the green line is actually due to the fact that the dollar is just weakening. Now, for us, number one, the dollar weakening is actually not a bad thing for us because we price our Bitcoin in dollars. Today, the price of a Bitcoin is $107,000, as you can see at the top corner of the screen, right? So the first thing is, it's not bad that the money supply is denominated in dollars, because that is the universal currency, so to speak, or the world reserve currency. But on top of that, we are getting an increase in the money supply. So it's not only a depreciation in the dollar, but there is an increase in the money supply. And there is about to be a whole lot of a bigger increase in the money supply. And that bigger increase in the money supply pretty much has to start very, 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 very soon, if not immediately. And the big factor that's actually driving, I think the biggest factor that's actually driving that increase in the money supply, and this factor is pretty much inevitable, is this big, beautiful bill that actually passed, right? So it finally passed. It's quite weird how it passed. There was an absolute deadlock between there was a deadlock, And if you look at, I'll just show you this chart over here. There was none of the Democrats actually voted for the bill. 3 Republicans actually voted for the bill. And there was actually a deadlock. And what needed to happen to open up that deadlock or to undo that deadlock was that J.D. Vance actually came and had to basically separate the tie. Just listen to this.
Let's vote. The yeas are 50. The nays are 50. The Senate being evenly divided, the Vice President votes in the affirmative. The bill as amended is passed.
So now the big, beautiful bill is actually passed. And I mean, the big, beautiful bill covers a lot of things. And I'm not going to go through all of them, but what you can see, according to Grok, is that most things in this big, beautiful bill actually force the USA to continue to spend. So I'll just name some of them for you. 2017 tax cuts extended, meaning tax cuts means more money in circulation. Increased child tax credit, more money in circulation. Introduces deductions for tips and overtime pay, more money in circulation. And so on and so forth. These things put more money into circulation. The main thing that it does is this line over here. This should have been the top line. And what it does is it increases the debt ceiling in the United States by $4 trillion. Okay, that's a massive increase in the US debt ceiling. So right now, the US debt ceiling is at $37 trillion. That's where it is right now. And theoretically, they shouldn't be allowed to go over the $37 trillion. But now that the big, beautiful bill is passed, they can increase this $37 trillion to $41 trillion. So that means $41 trillion of more spend from the United States because of the big, beautiful bill. And this is exactly what Elon was panicking about. This is exactly what Elon was fighting Trump about all the time. This is what Elon does. He believed when he was backing Trump that Trump was really on a mission to cut US spend and reduce the national debt. And now, with this bill, he's increasing the national debt or the debt ceiling by $4 trillion. Now, I want to just show you what that actually means in reality. So as soon as they raised the debt ceiling, they headed to $38 trillion in debt. Today, the interest rates are 5% or 4.75%. That's $1.9 trillion a year just to pay back the interest. $1.9 trillion a year just for the US to pay back the interest. Now, reality, guys, the US is broke. Like, you just have to understand that the US is broke. Balaji says it, everybody says it, Elon says it. The real debt, he says, 125 trillion. Elon is 100% correct. But the thing is that there's just no better option. And right now, there is no way that the US can continue to actually pay its debt. The only way that the US can continue to pay its debt is by devaluing their currency and by printing more money to repay their debt. So this printing, or this bill that was passed, which Elon was very much against, this bill that was passed has basically guaranteed more money in the economy. There's just no other way to look at it. More money into the economy. Now, when is this money coming into the economy? Well, at least much more, but at least 625 billion of it. I think it's not million. I think it's 625 billion of it. Is it? Yeah, I think that's where they get all the sections from. I'm not sure. Actually, I'm not sure of the exact numbers, but it starts now. It starts in fiscal year 2026, but the fiscal year actually starts on the 1st of October. So that's the latter part of the year. So this bill that was passed, the spending is going to begin almost immediately, with a lot of it actually happening in the latter part of this year. That's the first reason why that's the reason why the dollar is going down, because the market the people holding dollars don't like this bill. They don't like this bill because they can see that that it's forcing the US to be almost bankrupt or insolvent. And you don't want to be holding a currency of a country that is pretty much insolvent, right? And that's why you see the US dollar breaking down. Now, for us, more money plus the US dollar breaking down really means good things, because that's actually going to push up the price of Bitcoin, the price of gold, the price of silver. You really want to be holding those assets in your portfolio now: Bitcoin, gold, silver, etc. So that's the first reason why we're going to get incessant money printing at the end of the year. The second reason why we're going to start getting a more positive, more liquidity in the second half of the year is because of interest rates. So we had Jerome Powell yesterday. He was speaking in Europe. I think it was in Portugal, I think it was. And they asked him a very simple question. They said to him, like, Chair Powell, would you have increased interest rates if it wasn't for the tariffs? And I think that this is what he said.
Some time.
Chair, would the Fed have cut more by now if it weren't for the tariffs?
So I think that's right. In effect, we went on hold when we saw the size of the tariffs and essentially all inflation forecasts for the United States went up materially as a consequence of the tariffs. So
he basically went out and he said blatantly, he said, yes, we would have cut. It's the first time I think that he's actually said we would have cut rates if it wasn't for the tariffs. Now, with that, I think he gave a very stern warning to Trump again, saying, look, don't mess with tariffs. We know that on July 9th, the tariff deadline ends, or the 90-day tariff cool-off period ends. And I think it would be suicidal of Trump to actually start messing around with tariffs. So that risk is now completely removed from the markets, right? And I think the only thing that we now have to contend with is the inflation rate. 2% is close enough to where inflation is, right? The 2%. And that's why I think that if Trump plays his cards right, and we get another rate, and we get another positive or good inflation reading, which is, Josh, just find out for me when the inflation reading comes out. If we get another good inflation reading, I think we're going to get the rate cut in July, which is before the market says it. Now, if you've been watching my show, you'll know that we've been tracking this line. It was 100% no rate cut in July. A few days ago, it was at 81%. Yesterday, it was at 79%. Today, it's at 74%. So it seems more and more that the market is pointing towards the rate cuts sooner rather than later. And if we get the rate cuts sooner rather than later, then there are probabilities that we will actually get 1, 2, 3 rate cuts before the end of the year. That's 0.75% before the end of the year. And maybe this can tip a little bit this way and we can get 5 rate cuts before the end of Jan. It's not impossible. And that's what the market is basically starting to price in now. A lot of it depends on the inflation reading, which happens on July 15th, which is when I'm on vacation. But I'll text you guys. Send me your number and I'll text you guys. So I think the market is going to start pricing in a rate cut. I'm saying that, Shubham says inflation reading is July 15th. Thanks, Shubham. Josh already helped us with that. I do believe that we're going to get a July rate cut, and that's going to shock markets, and that's going to again bring more money into circulation in the market. So that is those are the 2 macro factors that I think are going to bring money into the market. And then the third factor, which I think is going to bring money specifically into the crypto market, is what they called the ETF summer, right? So we spoke about the Solana ETF being approved yesterday, and it was approved, and I think it starts trading actually today. But we also spoke about the fact that it wasn't a real ETF. It's like a poor man's ETF. It's like you can't buy a lot of it, and if you do buy it, you're going to get taxed like crazy. So it wasn't like a Fidelity ETF, right? It wasn't one of those ETFs. It was like a normal ETF. But then yesterday, the SEC actually published a approval for Grayscale. So, let me just show you this. Okay, I've just got to reshare my screen. It'll take us. Hold on a second. Is there a reason why my screen ain't sharing? Okay, let's try. I'm just going to try and refresh my screen share. Okay, so stop sharing. Hold on. Let me stop sharing my screen first. Sorry, guys. It'll take 1 second. And okay, it says, must I just refresh this? Hey, Josh? Okay, so let's refresh this. Okay, and let's share the screen. And okay, it should work now. Let's see if it actually works now. Does it work now? Yes. So what we see is the SEC yesterday approved Grayscale's GDLC to convert that into an ETF. Now, what is GDLC? It's their digital large cap funds, which actually holds XRP, Bitcoin, Ethereum, Solana, and Cardano. The final deadline was tomorrow. They approved it. Okay, what does that mean? It basically means that since the SEC has now approved an ETF with Bitcoin, Ethereum, Solana, XRP, and Cardano, it pretty much means that the SEC can't now say, hey, you can't have a Solana ETF or you can't have a Cardano ETF. Basically, implicitly, the SEC has basically said that all of these ETFs must now be approved. Because you can't, except for Gary Gensler, because he can say anything he wants. But most, like, you cannot say, hey, you can have an ETF with XRP in it, but you can't have an XRP only ETF. So what we can assume is that in the next couple of months, we're going to land up getting a whole lot more ETFs. There's one here. There's Tuttle has filed an amendment to change the effective date of a bunch of 2 times crypto meme ETFs to July 16th. We're going to get crypto meme ETFs going into a Melania and a Trump ETF, believe it or not. Those are the 2 crypto meme ETFs that are actually going to happen. And there's a whole lot of other deadlines or other, you can see that between now and the end of the year, we're going to get a whole lot of other ETFs being approved. Now, remember, these are the deadlines. This doesn't mean that this is when it's going to happen. These are the deadlines. This is kind of the last part of when these things can actually happen. So we're looking to get more money flowing into crypto and specifically into altcoins into the market. So what is the thesis now for altcoins? Altcoins haven't performed up until now. Up until now, stocks have stolen the limelight from altcoins. But with more money in the economy, people will move more down the risk curve. And when they move more down the risk curve, they'll realize, look, we've made a whole lot of money in stocks. The stocks have run a lot. The stocks are at all-time high. Where else can we put our money? Well, we can put our money into Bitcoin. Actually, we can put our money into Ethereum. Actually, we can put our money into a whole lot of large cap altcoins, which also now have ETFs. So in the next 3 to 4 months, all of these large cap alts will actually have ETFs. If the stock market continues to run, which, after the golden cross, we can make an assumption that it's not going to run in a straight line and we're going to go all the way down here, then we can expect people to move down the risk curve. And so I'm saying that we're going to get a new type of risk curve where people start moving, where people view this as one market with lots of investable assets, because it's so easy to move from stocks to Bitcoin. You just, on the same app, you buy the Bitcoin ETF, right? On the same app, you'll end up buying the ETH ETF. On the same app, you'll end up buying the Solana ETF, or the Cardano ETF, or the Grayscale big cap ETF, and that's going to bring more money into the altcoins. Up until now, we haven't had that. The reason why we haven't had that is because there were only 2 ETFs. So if Wall Street wanted to bring money into crypto, they went into Bitcoin. The problem with Bitcoin investors is that they're not really altcoin investors. And so there wasn't a flow between Bitcoin and altcoin. They also put some money into ETH, right? Problem is that there was such a big Grayscale fund that had to lose all its AUM for people who wanted to leave it. The amount it had to lose and the amount that people were buying basically netted each other off. With the altcoins and the altcoin ETFs, the inflow of money is very, very, very much going to be net new inflow of money and not old money actually flowing back into crypto. And so I think that not only are we going to get looser monetary policy, not only are we going to get more government spending, not only are we going to get all of that, but we're also going to get new ways for Wall Street to bring money specifically into altcoins. And if the altcoins don't rise once that new money starts flowing into altcoins, then we seriously have to question the thesis. And I don't believe we have to seriously question the thesis. I think the thesis is a very good thesis. And so I think the idea here is to chill. We need patience. I know we don't have patience, but we need patience. We need to build a very good portfolio, a very, very, very solid portfolio that's going to carry us into this altcoin season. So you kind of have to imagine what this altcoin season actually lands up looking like. Once you understand what this altcoin season lands up looking like, you land up building yourself a portfolio. But unlike normal portfolios, you land up building yourself a portfolio that actually has a whole lot of tokens and stocks. So like now it's so easy to invest in these protocols. You can just go and buy CoinX. You can just go buy CircleX, right? You can just go and buy HoodX. I'm just talking about all the different X's, right? You can buy MSTRX. Those are all tokenized stocks. So now if you want to capture those returns, you can actually do it. I told you yesterday where you can do it. You can do it if you're comfortable using a DEX. Go to Jupiter, go to Radium, go to any one of those DEXs and you can pretty much do it. Or if you want to go to an exchange and do it, I want to show you 2 things around exchanges. And then we'll talk about really how to build a portfolio. So if you look at the exchanges, so let's have a look here. If you look at the exchanges, So you can buy on Bybit, you can buy these tokenized stocks, and that's Bybit and Bybit EU. And you can also do it on BTCC. And if you do it on BTCC, whatever money you deposit into BTCC, you get a 10% deposit bonus, which I think is a bit of a crazy special, but they're doing it. So good luck to them. I think it's amazing. I know a lot of people who've put money in, deposited money, got the 10% and actually withdrawn their capital. You can do what you want. It's a non-KYC exchange. The thing I want to just quickly, for 2 seconds, just talk about, for those of you who are from the EU, before we carry on with more alpha, for those of you who are from the EU and are currently trading on Bybit.com. So you can keep your Bybit.com and your Bybit.eu account. So for now, you're trading on Bybit.com, but at some point, they're going to shut down Bybit.com for Bybit EU people. And then you're going to need to have an account on Bybit.eu. My suggestion is sign up now for Bybit.eu. Keep trading on your Bybit.com account, but sign up now for your Bybit.eu account, because the people that sign up first are going to get more benefits. And I'm negotiating the benefits with Bybit. I'll have them announced for you as soon as I've got the announcement. But sign up quickly, move from, you don't have to give up your Bybit.com account. You still carry on using your Bybit.com account, but you also open a Bybit.eu account, and then you get your free sign-up bonuses again, and you get everything else again. Okay, so that's that. I think we were going to build a portfolio today, but I think let's not do the portfolio today, because if we do the portfolio today, we've got very little time to actually do it. So let's rather meet again tomorrow, and tomorrow we can build the ultimate portfolio for crypto exposure. If you want that, I see Bitcoin now is at 107,900. I see Solana's almost about to break 150. I do believe that this is the run that actually takes us to all-time highs. And I think one of the reasons that I actually believe that is because when I look at the Bitcoin chart, I mean, it's like this is a really, really, really bullish chart pattern. Like if you just got to zoom out, and you just got to look at all the different chart patterns, and you can kind of see it's like in a bull market, it's up, 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 consolidate, up, 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 consolidate, up, 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 consolidate. That's exactly what's happening on this chart. There's nothing unusual about this chart. Here we went up again. Now we're consolidating, and then, I mean, unless something crazy happens, this is a typical bull flag. This is like a typical bull flag pattern. So I do think that this is the run that actually takes us up to all-time highs. Okay, before we go, let's check up on our bots. You'll remember that I put yesterday, I started putting money on our bots. So we've got 3 bots that we're actually tracking at the moment. The first one is 𝗙𝗘𝗕𝗏. 𝗙𝗘𝗕𝗏 had a banger of a day. You can see he made like 3 or 4% in the last day. This is a bot that accumulates Bitcoin. It's a bot that keeps trading and it accumulates Bitcoin, right? So far, I see there's 81 out of 200 people actually copying it. He's starting to make money. Remember, I had $55,000 yesterday. I've got $55,658. I'm not using this account for anything else. So it's literally only the money that I make in this bot. If you want to join us on this bot journey, specifically on 𝗙𝗘𝗕𝗏, you have to sign up with this Blowfin link over here. Once you sign up with that link, deposit money, and then just click on to that 𝗙𝗘𝗕𝗏, you'll land up here. You can press copy. I'm already copying it. And as look, again, we're in this for the long term. We expect this one to make more than 10-15% a month. And then you've got 2 other bots which we're tracking. We've got 𝗙𝗏𝗕𝗏 and 𝗙𝗏𝗏𝗏 on Bybit. That you can use with any link. These guys on the 30-day returns are about 10. They're targeting about 10% every 30 days. So you can take a small allocation of your portfolio and just leave it in the bots and let the bots actually land up trading for you. That's what I'm doing. We're going to keep updating you every single day about the bots to make sure that we're making money. I shall see. I don't care. YouTube. What about the shit country of the UK? I don't know. I don't think Bybit EU covers the UK. I think the UK, they're not in the EU anymore. They got their own laws, bro. They got their own laws. Buy baby oil stocks. Why is P Diddy out of jail again? So what's the baby oil thing? Can I show you how one of our researchers actually landed up making money today? I want to show it to you for 1 second, right? So when the SEC actually, remember I told you about poly markets. When the SEC actually announced that they approved this Solana 𝗙𝗍𝗍𝗍 ETF, he went to poly market, right? And he said, hold on, the chance of a Cardano ETF approval was low. Look how low it was this morning. It was 66% this morning. And he was like, hold on, that doesn't make sense. And then he joined the front runner research call. You can listen. This is what happened this morning. Can you hear anything? I also can't hear anything. It's quite sad because there's quite a lot to hear. Long story short, what he was saying it doesn't make sense that the ETF is approved. The ETF containing Cardano was approved. Is it sitting at a 56% probability when the ETF is almost approved and now it's sitting at 91? And that's an easy way to make like almost double your money. He almost doubled his money in a couple of hours because he was trading the inefficiencies between news and Polymarket. And that's a massive, massive, massive way to make money because Polymarket is not efficient yet because there's not enough users. So if you're fast enough, you can end up making a lot of money on Polymarket. Anyway, I'll see you guys again tomorrow. Until then, trade well, my friends.